We'll probably have a little shorter call than usual this evening due to another call coming on as well. So I will share my screen and do a presentation here, tell you a little bit about Eagle City Multifamily. All righty, so let's jump right into this. And people are joining as well, so we'll move on through this. And as usual, please feel free to ask questions throughout the presentation. Just raise your hand or unmute yourself and feel free to ask questions. So as usual, this is not legal or financial advice. It's simply education around the multifamily apartment investing, where we take deal by deal, create syndications, which is simply a pool of investors that come together to directly invest in these multifamily or apartment complexes, where we purchase and operate, and then typically 3 to 5 years later, sell the apartment for an appreciated price, right? And distribute those increased investments back to the investors. Investing in real estate may not make you rich quick, but will make you rich for sure if you stay in and make wise choices. So I'm going to walk through this rather quickly and share a little bit about Eagle City Multifamily. We're a group of investors that purchase apartments. We're privately held investment firm focused on stable income producing multifamily apartments in stable and emerging U.S. markets. Mostly focused here in the DFW area, but are open to some other markets that make sense. Multi-family real estate, that's what we're all about here at Eagle City Multifamily. And I'll introduce our team members as well here on the call. So here's some facts that support our belief that United States is expected to experience a significant demand for rental units. I believe we are becoming a renter nation. The recession resulted in an unparalleled shift away from home ownership and toward a strong demand for rentals. Stagnant job growth and significant lending guidelines continue to make any decision other than renting difficult for most Americans. Additionally, the prior recession significantly hindered and reduced the support of new housing, the supply of new housing. So here's our last acquisition. The pictures down here, Treetop Apartments here in Grand Prairie. Those are going quite well and stabilized, and we're at a peak, near the peak of our rents. We focus on B and C class apartments. That's where working class families live. And the age is preferably 1978 up to 90s in the 2000 year range. That's what one thing that designates the B and C class. And we always look for these buildings in a better than average area, like a surrounding area, so that to attract better tenants. As mentioned, we have a 3 to 5 year hold period, which is our business plan. Sometimes we sell sooner and sometimes later. But as soon as we can double our investors' money, then we look at either refinancing or selling the property and returning the capital. So the structure for each apartment complex, here's a little bit, if you can see the picture on my screen, here's a little bit of an outline of how each apartment deal works. Eagle City Multifamily is the managing member or one of the managing members of the property, and the property itself is held in an LLC, which is owned by all of the investors. So all of the investors are direct owners of these apartment buildings. And our superior cash flow system, number one, the superior cash flow filter allows us to thoroughly analyze 95% of all deals in the markets we target, with less than 2% qualifying for further review. And out of those, approximately 2% get more due diligence done to those deals. And out of those, there's a very small percent that actually meet our strict criteria for investing in and purchasing. Number two is the due diligence of our team. We analyze the on-site physical condition and financials of the property to mitigate potential risk and discover opportunities for our investors. Then we roll around to number three. Number three, the superior management advantage approach to performance. Our people constantly elevate our communities to top of class. So we care about the communities that we're creating in these apartment complexes, and also ensures predictable cash flow to our investors. And I'm sure you all have questions. Please feel free to raise your hand or unmute yourself as I go through this. And number four, the superior return maximizer utilizes a cash flow centric approach that positions the property for a proper and profitable exit for our investors. We return equity and profits of our investors are now positioned to take advantage of the next acquisition if you choose to. So it's a deal by deal. So you can, after you invest in one deal, you can take it out and do other investments, or you can put it back into other apartment investments. In the investor onboarding process on our website, we have a login, and as we have deals come up for investment, those you can log in and create your protected login, and you can look at the deal. You can read over all the documents. It's all a electronic signing process, so it's very simple and easy to use through our cash flow portal. So pretty very simple, easy process there. And here's part of our team. So Asif Kumar is our lead underwriter. I take care of the client, a lot of client relation and marketing, and as well, we all look at deals before we enter into a deal, of course. But these are just some of the lead roles. And Dr. Sanjeev Mall and his wife Nikki also on the team, and help with asset management, and we all invest in all of our deals. So we invest our own money into our deals as well. And so that's all I have on our so far. So any questions? Anyone have any questions or anything?
Do you want to discuss the difference between a C and a B and a C, 506 B and C?
Absolutely. Yeah, absolutely. Would love to do that. So we do two different types of offerings. 506B is it cannot be advertised. It is friends and family only, or friends of friends. And 506C can be advertised, but you have to be an accredited investor, which there's certain criteria with the SEC. And Charles, feel free to help clarify the difference there on these offerings. Oh, you're muted. You unmute yourself.
Okay, up to 35, sophisticated, that means not accredited in most terms. Investors can get into a B, Reg D 506B Bravo. And so that allows people that are not wealthy to get into those things. And it's a fairly lucrative investment most of the time. I mean, my track record has been very good. As for the C, that's the ones you can advertise. And the one sort of painful thing is you actually have to prove your accreditation. And there are websites that you can do it on now. It's easier than it used to be, but essentially you do have to prove it. Whereas on a 506B, you can just state you're accredited, and they don't really protect you that much. But you do have to give the lead a piece of paper that says, "Hi, I'm a good guy and I know what I'm doing." And then at that point, when you go, "Oh crap, something went wrong," you don't have much of a leg to stand on because you already testified to yourself that you knew what you were doing. So therein lies the major difference.
Awesome. Thank you, Charles. Yeah, so there's some guidelines to go by set by the Securities Exchange Commission, right? So basically, we want you to know what you're investing in before you invest with us, right? We want you to know that it's not liquid until the deal sells, right? Your money is tied up in this apartment building, which is good in most cases, but if you need to pull your money out for whatever reason, it's in the deal until the deal sells typically. And so we want you to know what you're investing in, and we don't want you to be investing the only money you have into the deal, right? If it's your first $50,000, we prefer you not invest if you don't have a reserve over here on the side that you can live for 3 to 5 years if you lost your job or whatever reason. So we want you to do this smart and safe, and we want it to be a great investment for everyone, every investor. So any other questions? Any other thoughts on this? Okay, we have a post in the chat. What is everyone's thoughts the next 2 years on multifamily?
I'm going to go on record and say that the worst is over, in my humble opinion. The deal I got into last year that was a floating loan, stupid me, that's the one I'm going to have problems with. If I still had some money, and if I got into a deal this year, we know that the values have gone down, so we're not going to pay so dang much for it. And we're sure as heck not going to be stupid enough to get a floating loan. So I think those deals will probably be pretty good. I mean, the problems that people will have mostly, I mean, there's always other issues, but mostly those problems are going to be past tense after the fact. You get slammed with the thing you didn't know about, and then you're already in it. So I still think it's a good place to get involved with. But again, always bet on a very good lead, bet on the jockey.
Thank you, Charles. And I'll tell you, everyone that listens to this and hears this, why you should listen to Charles. And one reason is the length of time he's been investing, And the other thing is his experience and the amount of deals that he has invested in. So, Charles, do you want to let us know about how long you've been investing?
My wife, it is all her fault. My wife dragged me into the first real estate meeting in 2010. We ended up joining Lifestyles that year, met Brad Sumrock, got into our first deal in 2011. At this point, we've gotten into 70 deals, 37 of those have gone full cycle. And, a few of them, every one of them has done well, but a few of them haven't. You can't have everything. And then, so we're holding 33 deals. I will clearly state that we got into some last year that are floating rates. They are, sending all my money to the bank to pay that extra interest rate. And I call those my zeros. That's the baseball team right now that I can field that are the zeros, because they're not paying anything in the way of distributions. But hey, life's tough. You know what you're getting into on this stuff, so you suck it up and move on.
Oh, thank you, Charles. But that doesn't mean they won't bring you returns, right? We'll get through the slump, hopefully. And then when they sell.
Thus far, I have had one lead, and I'm not even sure it's a floating loan. I think there might be something else going on with this one. And he said that he's thinking about possibly considering the action of asking us for maybe a cash call. I mean, that's the level that we're at right now. And so I don't know. I fully expect to see more cash calls for the next 6-8 months. There's the question, what's good money after bad? You got to evaluate that. And then, but thus far, I've gotten involved with very good leads, in my humble opinion. And I think that we'll probably do fine. I just won't see the huge returns I've seen in the past. I sure as heck aren't going to see any cash on cash for a while. But like I said, that's life. If I feel we'll come out okay.
Awesome. Yeah, thank you for your input there. And we have another question here in the chat. And while we go through that, we have one lucky winner on this call. And if you can see on your screen, the spinning wheel will choose one lucky winner for a Starbucks gift card. And whoever it stops at, it's a Google wheel of names. And so Google stopped this at Charles Lemire. Look at
I'm not sure that's a Charles, but we'll let that go.
Oh, there is a typo. Well,
that'll be fun. Okay. I'll just pick on you for that one. Don't worry.
I'll get a better assistant next time, right? Just kidding.
No, Nikki's fine.
The coffee won't know the difference.
Right. There you go, Greg. So this gift card will be emailed to you within the hour. You can open up your phone and you know how it works.
Yeah.
And there you go.
I want to make a profit attending your stuff. Well, cool.
Yeah. So there's a question in the chat. Are there any good deals out there? We're always open to deals. We're always searching, and we're always open to, working with people we, know and trust, of course. We're seeing a low cap rate. What's an acceptable cap rate in this time to get into a deal? Any thoughts out there?
Okay, I'll stick my 2 cents in. You have people that own properties and they really don't want to sell at a loss. And until they're motivated to sell at a loss, the offer for deals is a lot lower than the ask for deals. Is that the right way? Ask and bid. Let me use it in ask and bid. The ask price is going to be a lot higher than the bid price at this point, to put it in market terms. And so there's not a lot of meeting of the minds in so many cases. And until, either the rate caps fall off or some other compelling event happens, there's not going to be as much traffic for a while. But there are good deals out there. When they strike a deal, you got to look at each one of them. The prices are down if it's bought today because they sort of have to. So that would imply that as a lower price, you're going to probably make about the same amount of money. So that means sort of a lower cap rate, which is typically a good thing, but who knows for sure? I mean, you just got to operate the property well raise the value, raise the rent so that you make more money on the full thing over time.
I agree. Thank you, Charles. Yeah, some of our brokers are telling us to submit our bid, our offer, even though it's quite a bit lower, right? Now they said 3 months later, the seller will may come back to and negotiate or accept. So, all righty. Well, if there's no other questions, and let's talk about apartments here. There's no other questions. Thanks for joining, Greg, DeLorean, Sanjeev, Nikki. All righty. Well, we'll see you all next week.
All right, Herb. Thanks.
Thank you so much. Bye.